Hi guys, so I wanted to talk about something which a lot of Forex traders don't tell you, and I think it's because they're using it as a way of luring you to pay for their courses or sell you a dream that doesn't exist. And it's this idea of telling people that you can start off with very little in Forex and stocks, and then you can make tons of money, millions of money. And I remember a point when I was teaching someone, and they were starting, in fact, two guys, they were starting off, and they said to me, I'm going to start off with $100 account, and then I'm going to double it, to triple it to $1,000. And I remember saying it's possible, but not sustainable in the long run. So what a lot of traders will tell you is that when you start off with $100, you can make 2% a day, and then make 14% a week. And once you're really profitable, you can start making 15%, you can start making 20%, all which are unrealistic returns. And we're going to get into why it's unrealistic. The first point I wanted to talk about is the fact that the higher your risk per trade, the greater your chance of blowing and greater drawdowns. So in this book, Way of the Turtle, I just want to show you this graph on the research they did. And so this is on page 112. You can check it out yourself. But we're going to go through some of the stuff he writes in this book. And I'm just going to point you to the pages. So in this one, on his graph, it showed that once you pass 3.6% risk per trade, you are now approaching 90% chance of blowing your account. Imagine that you have a $100 account. You're risking $3 per trade because someone told you can make 2% a day, 14% a week, and you're risking $3, just $3.5. Yeah, exactly, just $3.5 of your $3.5 of your $100 account puts you at over 90% chance of blowing your account. And so you can imagine, if you're obviously trying to grow your account on $100, you are going to be risking $3, $5. And before you even get to risking $5, you are at over 93 to 95% chance of blowing your account. So the idea that they're telling you that you can double, triple, and quadruple your account with more experience is not true, because the math is against you. Let's look at other things. So in terms of unrealistic returns, Jim Simons, who's one of the greatest traders, has 72% returns. Right now, that's if he uses a lot of maths and a lot of algo trading. He doesn't do a lot of the trading, so it's an algo trading. Maybe it's possible to get that kind of returns if you're doing an algorithmic trading, where it's not really you trading with all your emotions and all your other stresses. It's possible to get 72% returns, but as we know from what we've seen with Way of the Turtle, is that it's very unlikely. Excuse me, otherwise we'd all have Lambos, and there wouldn't be any need for people to be enrolling in finance majors, economics majors, and most institutional traders don't make as much as that as a salary. So, like for example, if someone says start off with $100, and then every 2 days you'll be making 2%, you'd get to 100,000, 200,000 easily overnight. And the question is, why would people be working as institutional traders when they can simply take $100 and turn it into 200,000? It's not realistic, and it's not sustainable. You will blow that account. So Dr. David Poor, I've posted a video of his. It's a long seminar of his, and he's a mathematician who talks about how every trader, despite whatever field or you're in as a trader, whatever markets you're in as a trader, whether it's oil or gold, what happens is these clusters of losses. Mathematically, I don't know why it happens. And this is the interesting part. He said once your win rate passes a certain threshold, 65%, you're actually a greater chance of having more losses in a row. I'll repeat. In short, what his research was showing was that the higher your win rate, the more losses in a row you will experience. So although selling you a 90% win rate, you will end up having losses and losses and losses in a row. So you'll have 17 losses in a row, for example. And if you're not managing your risk within those clusters, he calls them clusters of losses, within those 17 losses in a row, you will blow your account. And the problem is, as he says, we don't know when those clusters come up. He's a mathematician. He also can't figure out when those come up. So what happens is that even if you're doing trying to double, triple, quadruple your account, the minute you have one bad loss, that will trigger losses and losses and losses, and then you'll end up blowing your account. Also, go look at the book, The Millionaire Fast Lane, and they explain a lot of this, which is the idea that people teaching you courses, selling you robots, are not making as much money from the thing they're teaching you. They're making money from selling books and selling courses and things like that. Just to sort of get to the point of this, the really successful traders who have realistic returns, and in his book, this one by Curtis Faith, Way of the Turtle, that I'm discussing here, on page 111, he says that if you begin with 50,000, this is on page 111. If you begin with 50,000, you will have almost 10 million after 20 years if you earn 30% returns, right? Trying to go for very aggressive returns of 100% or 200% per year greatly increases the chance that you will blow your account and you'll stop trading. So this is as sad as it gets. Like, people who are telling you that you should be doubling and tripling your accounts are really lying to you and will lead to blown accounts. So on page 110, he says, obviously says most vendors or systems or course sellers make it seem that anyone can follow their methods and achieve riches quickly and easily. They do this because it helps them sell more systems, more courses on trading. They understand the dangers of they understand the dangers of risk and overstate the possibility of attaining those riches. They are lying. Risk is real. Steady returns of 20 to 30% per year will make you a lot of money in a reasonably short period, starting with almost any amount of money. So when he says a reasonable amount of money will make you rich, he says 50,000, starting off with 50K and making 20 to 30% steady returns is good. So anyone telling you more than 30% per year, as we've seen what Curtis Faith has talked about, really is selling you a dream. And we're going to get into some of the other interesting stuff in part 2. But what's important to note is he's like 20 to 30% is a reasonable amount to start off with. And so those who are making good returns, those realistic returns I'm talking about, 20 to 30%, they also have multiple streams of income. So I've done a video on this and saying on the video that says how much do FX traders make. And the ones I know who are making tons with realistic returns of 20 to 30% a year have multiple streams of income. So they have businesses they're running, they have courses and training, they do real estate, YouTube, copy trading accounts where they earn commission from everyone who copies their trades, network marketing, affiliate marketing, and some even mining. But at the end of the day, you really have to just try it out for yourself. If you think I'm lying and you want to try tripling, doubling, and multiplying your account, you can go ahead and try it, but it all ends in misery.